G'day everyone, welcome back to Pete's Investing. Today is May the 16th, 2023. This is a spot silver price update. Our indicators on the weekly and daily. On the weekly they're showing a neutral positioning, and on the daily it's a bearish positioning. So let's look at that more closely for those new to the channel. We look at the triple moving average of the CCI, of the price chart. That's a moving average 3, 5 and 60 of the price chart, and compare that with the moving average 5 and 50 of the CCI 150. Now you'll notice here in the previous weeks, this is the weekly chart, on the previous weeks they were in a bullish momentum. At the moment, because the CCI and the price chart, they're breaking down, and at the moment it's in a neutral, so neither bullish nor bearish, so probably avoid trades at the moment until both daily and weekly timelines are in alignment. On the daily, you'll notice we're in a bearish movement, so again cautiously going short only, but I'd wait for the weekly to also be in a bearish signal before taking any short trades on the lower time frames. Looking more closely at the daily chart as well, we've got this support here at 1991 and this key resistance up here at 2607. I've also drawn these two diagonal descending lines, and it was in that channel for some time, broke above that, bounced off the resistance, and now currently trading in this channel again over the last few days. Now there was a Fibonacci retracement here, and it broke down, and it's currently that wick has reached just about the 38% retracement level, so it could possibly bounce from there. But at the moment, what I've done here is I've also shown you these bearish divergence on the CCI versus a flat divergence on the price chart, and these things generally play out. Back here, you'll notice here a bit of history. There was a bearish divergence on the CCI along a bullish divergence on the price chart, and that actually broke to the downside. And the way you would trade that typically would be to draw a channel between those highs up there and bring it down to the lowest lows, probably around about, I'd suggest probably there. And when the price breaks below that channel in alignment with this CCI in a bearish movement, as long as that keeps declining, you would have entered a trade somewhere there. Again, this is a daily chart. You would have entered a trade somewhere there and play down set a target. Now the way you'll probably set a target is probably use a Fibonacci retracement from that low into those highs. So for example, had you entered a short position somewhere in that candle, even at that bottom of that candle, you would have set a target, if you're really conservative, set a target at 38%, or somewhere maybe in a 50% level. But don't get too ambitious. Try and take the next Fibonacci fall as an example of where to set targets. Now in this case it fell below the 61% and touched just below the 61 and above the 78% Fibonacci retracement. But again, I'd like to be more careful and try. So if you had entered there, I would have taken a 50% retracement somewhere around there. You would have exited it with a little profit. Now currently it's in this bearish divergence on the CCI versus a flat divergence. So they don't always play out, but they usually do. So again, to trade this, you would typically, let me draw a channel on that one. So between those highs and those lows there. So had you entered short there, you would probably aim for a target, if to be very conservative, and it's touched that on a 38% level. Or if you're really ambitious, go for the 50%. But again, just be careful of going too far, too greedily. So again, if that was in alignment with the weekly, and it's not, it's a neutral on the weekly, probably avoid going short if you want to be really careful. On the daily, on the hourly, one thing to notice as well, you'll notice here there's a divergence there on the daily, but there's no divergence on the hourly or smaller time frames, so they don't always align. So going back to this one here, for example, there was a slight divergence on the CCI, but notice more recently between those highs on the price chart and that's actually a bullish divergence if you look at that. So they don't always align on the smaller time frame, so they're not necessarily one for one. But I'm looking at the hourly more closely. Again, you can see there it's hugging this diagonal descending line. So to trade that, again, making sure the weekly and the daily are aligned, we would trade using the same methodology on the smaller time frames, in this case the hourly. Now what I've got up here is a back test, and this is going long only. I haven't put in the short program to keep it simple, but you would reverse it basically. So when the weekly and daily are in alignment, you would trade the same methodology going long. You can see here most of these trades were single entry and exit trades, with the exception of this big one here and that one there. So to avoid those drawdowns on your profitability, this is a profitability chart. To avoid those multiple entries or multiple average downs, again, you would only trade when the weekly and the daily are aligned. So you can see there, during that fall, there was a bearish outlook on the daily, and that more recently as well on the weekly, there was a bearish outlook. So you would have avoided going long. Again, this is a long program to look out for. So to understand this and other trading strategies, reference the links in the description below. To subscribe to my Patreon page. On that Patreon site, we also do some stock scans, currencies and commodities. And subscribe, like and share the channel. Thanks for watching, and see you in a future video.